Hello and welcome. I'm Adam with Push the Envelope, the channel that gives you everything artificial intelligence and machine learning. Today we are kicking off a brand new series and we will be predicting the stock market using machine learning. Now the stock market is a very good machine learning beginner tool because it has a ton of data, a ton of statistics, and you can do a ton of analytics on it. Now we will be looking at how we can use some fundamental data, creating our own features, looking at what features are existing out there and how we can use those to predict the stock price for the next day and figure out if we want to invest or if we want to kind of hold out or even short the market. So without further ado, let's jump right into getting our data ready for our linear regression and logistic regression models. All right, over in the Jupyter Notebook, let's go ahead and start importing some modules. So pretty much like always, let's go ahead and import NumPy as NP. We're going to be importing pandas as well as PD. We're going to be importing matplotlib.pyplot as PLT. Those are going to be our three main data manipulation visualization packages. We will also be using a lot of datetime. So from datetime, we're going to be importing datetime. I'm not sure if I'm going to use time delta, but I'll do that one as well. So this just lets us convert strings or just integers into times and then adds days or years or however much we need to add to it. And the last thing, and the most important one for stock data, or for this tutorial anyways, there's a whole bunch of other packages you can use, but we are going to be using Y Finance for Yahoo Finance. I'm going to be importing that as YF. And go ahead and run that. So those are our main packages. I have tutorials on the first three if you need to see those, and we're going to be doing a lot with Yahoo Finance, so don't worry too much about that one. But after you go ahead and import those, we can start. Now, for those who are new to stocks, there is something called, stocks are broken out into a whole bunch of different groups and categories, and there's something called the S&P 500. And it has a list of 500 stocks that are all included within that category. So what we are going to do is we're actually just going to use those stocks. And what we want is the ticker. So the ticker is just an abbreviation for the stock. For instance, Apple is AAPL. Tesla is TSLA. It's just shorthand and it's very easy code that you can use to look up the stock data or the stock itself. So we want to look up all of the tickers that are in the S&P 500. And we're going to do that by using a wiki page. So I have another tab open, swapping over. You can see there's a wiki page out there that lists all of the S&P 500 companies. And right here you can see all of their tickers. And so we are going to be taking this page and opening it through pandas. So I'm going to call this tickers. It's going to be equal to pd.read_HTML. So we're going to be reading the HTML, and what we're going to do is we're going to pass in that website. So go ahead, pause the video, or just write this down really quick. This is the website that we are going to be parsing to get those tickers. Now, when you read HTML, it's going to read it into a whole bunch of different tables. We actually want the very first one, so I'm going to pass 0 for the first index, and I only want the symbol column, which contains all the tickers. So I'm also going to pass that as well. So if I go ahead and do that, I'm going to print tickers. And you can see now we have all the tickers within the S&P 500. Okay, let me make a new cell here. Now what we're going to be doing is we're just going to be running through that list. So I'm just going to make a simple for statement. So for ticker in tickers. And actually, right off the bat, I don't want to run through 500 of these every single time I go to run the code. So I'm actually just going to say, give me the very first ticker. So tickers 0 through 1. Okay. Now, when you start extracting data, obviously stock market data is all based on the time, the date and the time that you go to extract it. So we need to start using date time in order to give us the starting and ending dates that we want to collect the data from. So I'm going to actually start with the end date. And that is going to be datetime.now. So it's going to take today's date. In this case, it is the 20th of February. Now, when we use this, obviously the stock market is not open today. So luckily the module that you're going to be using is smart enough to just take whatever the last day was. So in this case, it would be Friday was the last time the stock data was open, or the stock market was open to grab data. Okay, so now that we have the end date, let's go ahead and get the start date. What we're going to be doing is we're actually just going to go ahead and take the end date, and we're going to be subtracting a time delta. This was one of the ones I imported from datetime, so luckily I did. So let's go ahead and take our datetime, and we're going to say we want to subtract days equal to 15 times 365. So this is going to be 15 years that I'm going to be extracting. So 15 years ago up until today. Okay. Now that we got our dates, we can go ahead and download our data. So I'm going to call this history. And that is going to be equal to YF, which is that module we just imported, Yahoo Finance. So YF.download. And now we need to pass it our ticker. And then it is going to be looking for our start date. So start is going to be equal to start date. Same thing. End is going to be equal to end date. Okay, now it's going to be looking for intervals. I just want daily tickers. So interval equals 1D for 1 day. And then I'm going to do pre-post equals false. So pre-post means, for those again who are not familiar with the stock market is open a few hours before and after the actual market hours. And so if you include that, this will spit back out the pre and post hours for the stock. I don't really care about that. I think the default is false anyways, but if you wanted that, you could actually change that to true, and it'll give you more data for those hours leading up to and after the normal market hours. Okay, so this is going to give us a data frame with all of the stock data in there. So let me just go ahead and display this. Okay, and you can see we have our dates as the index. We have our opening price, our high price of the day, our low price of the day, the closing price. Adjusted closing just accounts for things like stock splits and stuff like that. And then we have our volume of how much it was trading. So the only things I really care about for the purposes of this tutorial are the opening, the close, and the volume. So I'm actually just going to reduce this data frame down. So I'm going to say history is equal to history.locate. We're going to be taking all of the rows. So I'm just going to pass in a colon. But I only want, like I said, the opening, closing, and the volume. Okay, so for those not familiar with locate, it's just locating whatever rows that you want and whatever columns that you want. So this should reduce the data frame down to just those three. Let me go ahead and print it again. You can see it now just gives us those three columns that we care about. Okay, now is where we get into building our data set. If I threw this right into an algorithm, it would not know what to do with it because it does not have enough data to go on in order to predict in this case, we're going to be predicting the closing price. So we need to start passing it indicators, and we need to start passing it other data so that it can make its assessment on what it thinks the price is going to be tomorrow or some random day. First thing I could think of that we can use is what was the price yesterday? So like I said, we are going to be predicting the closing price. So in the end, we are going to be getting rid of this column. So what we'd really want is the closing price of the day before. So essentially we want to shift all of these down one. And that is exactly what we're going to do. So we're going to make a new column. So history at, I'm just going to call this prev close. That is going to be equal to history.locate. Again, we're going to take all of the rows, but I'm going to take the close column. I don't have to put the brackets here. Okay, so give me the close column, and I'm going to do a dot shift 1. And shift is exactly what it sounds like. It's just shifting all of the datas in this row down 1. And then it's going to put a not a number at the very first point because it has nothing to shift, obviously. Besides the close, I also want to know the previous volume, so I'm going to pass that as well. And remember to change this one over here. And go ahead and run that. Now you can see all of our, let's see, if I have closing price here, the closing price before was 148.639999, and that's what we have right here. Same thing with the volume that was moved down. And like I said before, not a number is placed at the very top because there was nothing to shift, obviously. But we'll take care of that later. Okay, that gives us the previous 2 days, but again, that is still definitely not enough to go off of. If you just had the price yesterday and you could predict what the price is going to be today or what the price is going to be tomorrow, then you'd be a millionaire and not watching this video. So let's go ahead and start grabbing some more data. Now, since we're doing daily stock polls, so we're doing a data point per day, something that could be interesting is what day of the week is it? There may be a correlation between the day of the week and whether stocks go up or down. So let's go ahead and pull that. And I'm going to do that using this date column right here. Now, the one thing about Yahoo Finance is it puts these dates into NumPy date times. And personally, I do not like NumPy date times. They're pretty hard to handle versus just the normal date time module. So I'm actually just going to convert those so that we can use them. But first I'm just going to extract that entire column. So I'm going to say date times is equal to history.index.values. So pulling all of these values out of the index. And I'm going to make a list that will hold all of my weekdays. And now I'm just going to iterate through all of those date times. So for DT in date times, we are going to be converting the NumPy date into a string and then parsing it into a date time. So in order to do that, we are going to say dt is equal to date time dot strip strp time, and we are going to take the string of whatever that date, whatever this NumPy date is. And now the second part is looking for what format is the string in. So if I go ahead and let me just print the date times just so you can see what they look like. I'll comment this out for a second. Okay, so you can see it's the year hyphen month hyphen day. Then it has a T for time, and then it has the time with a whole bunch of zeros after it. So we're going to have to just extract all the useful information for us. I'm going to go ahead and get rid of that, and we'll continue on with this. Okay, so it's looking for a string that has placeholders for all of these different things. So %y, it's a capital Y, so it's going to take the full year, and then it's followed by a hyphen, and then we're going to do %lowercase m for month, and then hyphen %d, this is for the day. And that takes care of the date part. Now, it's followed by a T for time, so let's go ahead and throw a T in there. Next thing is going to be the hour, so %H, followed by a colon, %M, followed by another colon, %S. So hours, minutes, seconds. And then the very last thing we need to do is add all of these zeros in because we don't need that much precision. So let's just go ahead and remove them all just by adding them in here. Okay, and that will give us the new time. So let me go ahead and just print DT. And you can see it is now a date time form. And the date and the time are now separated, and it's in a different format. So now we can go ahead and use a attribute of datetime, and that is going to be called datetime.weekday. So we are going to say weekdays.append dt.weekday. And then we are going to actually say history at weekday. Let me back that up a little bit. Okay, so history at weekday is going to be equal to weekdays. All right, go ahead and run that. So what does this do? Well, weekday is going to add another column here, and it's going to add an integer for whatever week or whatever day of the week it is. So Monday, I believe, starts off at 0, and it goes up to Sunday to 7. So whatever integer is that day of the week starting from Monday, which is exactly what we want. Okay, now we will move from some of these stock values and days of the week to more fundamental indicators that we can put together and that you may be using if you actually analyze a stock. So let's go ahead and do probably one of the most common ones, and that is just a simple moving average. So let's go ahead and do that. Actually, Pandas has a lot of built-in functions, and one of those will actually pretty much do this for us. So all we have to do is say make a new column, and we're going to call this, let's start with 200. So 200 simple moving average. And that is going to be equal to history, get this out of the way, at prev close. Okay, so this is very important. When you are putting this data together, if I go back down to our data set, so like I said, close is the thing that we're trying to predict for the future. So when you're doing all of these simple moving averages or some of the other indicators that we're going to put together, you always need to use the previous close because you will not know this current close. If you use the current close, you are going to be leaking your data and giving it more information than it actually knows when it would have made this prediction blindly. So you need to use previous close and previous volume whenever you're making a calculation, or whenever you're making a new column in here that you're going to be using to predict. Okay, so we're going to be passing it in previous close, and we're going to use a dot rolling for rolling average. Now, rolling is looking for how many is looking back, so 200, and then we're going to do a dot mean. Okay, so I think the best way to show you what a simple moving average is, if you haven't seen it, is to just plot it. So I'm going to do a plt.plot. Let's just call a new value. We're going to call x is going to be equal to history.index.values. It's going to pull out all of those dates. I just don't want to write that every single time, so I'm just going to call that x. And then our y is going to be, let's go ahead and plot the previous close. So history at prev close. And let's go ahead and pass this a color. So color equals blue. Okay, so this is going to plot our stock data. And now I'm going to also plot that moving average, so you can see what that is as well. So passing it in x again, and this time it's going to be history at 200 SMA. And this time we will make our color, let's just go with red, I guess. And then do a plt.show. Okay. Let me make this a little bigger. So plt.figure. Big size, let's make it 15 by 5 maybe. Okay, that's much better. Okay, so this blue is our actual stock data. And now this red line is a 200-day moving average. So it's taking, the point is calculated by looking at the average of the last 200 days, and it's just moving out. So you can see it's this very smooth curve. It follows the data, but it's a few days off. And that's because of how long of a moving average it is. So since we're using 200, this is a very long period, and it's going to be the long-term trends of the stock, whether it's going up or down. And we can actually go ahead and calculate other ones. So the smaller the number, the more recent the data is looking at. So those are more short-term. So let's just do a whole bunch of these, just different sizes. And I'm going to do so by just copying this a few times in here. It's good for now. Okay, so we're going to do a 5-day, a 10-day, a 20-day, a 50-day, and a 100-day, just to give us a whole bunch of different data sets that we can use. So let me go ahead and write all these in. 20, 50, 100. Okay, make sure you change the rolling number and you change the column number. And if you want to see it, we can go ahead and, I didn't mean to run that. We can go ahead and plot some of these. So 5, 10, 20, 50, 100 and 200. Let's start changing some colors here. So we'll go orange, green, pink, purple, we got red, do like a cyan. Okay, I put 500 instead of 50. So up here, I accidentally put 500. Make sure yours says 50, and you should be able to go after that. All right, now tons of data on here. It's very hard to see. So let me see if I can zoom in a little. So I'm going to do PLT xlim. Okay, let's say we're going to start at x equals 500 maybe, and then x equals 1,000. So x at 500 and 1,000. Let's see what that gives us. Not enough. Oh, that's because I went the wrong way with it. Still not enough. Let's see, 1,500. Okay, well, it's just a lot of data here. So basically what we have, though, is the moving averages across all of the data. Yeah, it's still zoomed in too much. But as you can see, it's just this red one is our 200. Then we have a slightly more reactive one, which is our 100. And then as you can see, as the size decreases, it starts to fit the data way closer. But the thing that is most useful using these, let me just go ahead and get rid of these. Maybe I'll make this one green. And let me get rid of this xlim for a second. Okay, so the thing that is most useful on these, I have the 100 and the 200 up right now. Now, these indicators are very good either standalone or compared against one another. So for instance, if I just look at the red line, anytime the data is going up, obviously it is above this red line. So if the current stock price is above the red line, that means it's trending upward. And since we're using 200, long term is trending upward. Now, I mean, it does dip down below it, and it does sort of make a recovery after. But as you can see, whenever it dipped below the red line, it is going negative. But there is a lot of lead up because it's such a long period. Now, the other thing that you can do with this is you can compare the two. So in this case, the green line, maybe I'll change this one to 50 and see if we can get something better out of it. Yeah, okay. So this green line is 50, and it's a lot more short term than the red one. So what this is telling you is if the 50 line is below the red line, so the 200 line, that means short term we are going negative, but long term it's still positive. If that's the case, then that could mean that the stock is about to start trending downward the entire time, and vice versa. If the green line starts to get over the red line, that could mean the stock is turning around and it's going to start becoming more positive, going an upward trend. So comparing all of these together is a useful tool. It's not the only one that we can do, and I'll show you some more that we can do, but for starters, this is a fairly good one to work with. Okay, so we have simple averages. Next, we'll do MACD, and I'm actually going to define a function for this. So I'm going to go up to the top, and I'll show you what MACD actually is. So way before all this, I'm just going to define a new function. I'm going to call it calc MACD. Okay, so this function is going to be looking for data. So it's going to be looking for whatever data we want to apply it to. And then it's going to be looking for a whole bunch of different lengths, so a whole bunch of different periods, kind of like what we just did for the simple moving average, but we need 3 of them in this case. So I'm just going to call each of these length 1, length 2, and length 3. And then we can go ahead and start calculating the MACD. So similar to simple moving averages, the MACD uses exponential moving averages. So just a different way of calculating the average over time for however long that we put in here. But it does something like I just described, where when one is over the other, it's kind of an indicator of what direction it may be moving in. And so it takes two exponential moving averages, compares them to each other, and then takes the difference to see how far off they are from each other and which way the stock is tending to trend in. So to do that, we need to come up with a short EMA, so exponential moving average. That is going to be equal to whatever data we pass it to, dot EWM. This is a built-in pandas function. And then we're going to be passing it in that length. So we're going to say span equals length 1. I'm going to put adjust equals false. And then we're going to do a dot mean to take the mean over all of this exponential moving average to give us the average part. Okay, so that gives us the short part. Next thing we need to do is calculate the long side of it. And so we are just going to change this to be long. We're going to say the length 2 is going to be our long length. And that's good. Okay, so now we have two exponential moving averages that are kind of going against each other and giving us the trend of the stock. So MACD, which is what we're trying to calculate here, is going to be equal to the short EMA minus the long EMA. So whatever the difference between the two is, whether it's positive or negative, will tell us which way the stock is trending, or indicate to us which way it's trending. It's not always positive. So that is the first one. There's another thing that we can do is just get the signal that goes along with it, just to see if the it's basically an exponential moving average of the MACD itself, to see how the MACD is progressing over time. So we will go ahead and say signal is equal to, if I can spell it right, is equal to MACD, so the one we just calculated, and we're going to do the same thing that we just did before. So EWM span equal to length 3, adjust equals false, and take the mean. Okay, so these are the two that we want, the signal and the MACD, so let's go ahead and return that back to the main function. Okay, function is complete. Let's go ahead down to main. And we are going to just create two values to hold those. So signal and MACD is going to be equal to calc MACD. We are going to be passing it history at prev close as our data set. And now is when we start defining all of our periods that we're going to be using. So common ones to use for MACD are 12 and 26. And then for the signal, we can just use 9. And don't worry, I will show you exactly what this looks like in a second. First, we need to add it to our data frame, though. So history at MACD is going to be equal to MACD. And then same thing, history at, we're going to call this MACD underscore signal, is going to be equal to signal. Okay, two values here. Now I'm not going to plot this on the same graph, and I'm going to show you why in a second, because it's a totally different thing that we're trying to plot. So I'm going to steal at least the first part here. So I'm going to make a new figure. I'm going to actually shorten it because there's not as much data that we're going to be plotting. Okay, so we are going to be plotting the MACD. Now the MACD, it's just a whole bunch of positive or negative values. So the best way to represent it is going to be a bar chart, actually. And so we will say plt.bar, we're going to pass it x, we're going to pass it history at MACD, and color. Okay, so I'm going to put a variable in here real quick. So colors equals colors, and we're about to define colors right now. So go above it, we're going to find a new variable called colors. Now, what we want this to be is every single time the MACD is positive, we want it to be green. And when it's negative, we want it to be red. So let's go ahead and define that right now by saying np.array. We are going to start with all green. So we're just going to say, I want green times history, times the length of history at MACD. Okay, so this is just making an array of all greens. Now is when we go through and we start to figure out which ones are red. So the colors wherever, so I'll put a bracket here, wherever the history at MACD, I want to know wherever that history is less than 0. Okay, and we are going to set wherever it's less than 0 to red. Okay, so this gives us all of our colors, greens and reds for whether it's positive or negative. And the bars will give us our actual MACD projections. So other thing, we have that signal, so we can graph that as well. So we'll do X history at MACD signal. Let's do this color as blue, maybe. Okay, that should take care of all of it. So I'll do a plt.show. Let me take a second to graph. Okay, there it is. Let's try to zoom in again. Maybe I'll be able to do it on this one. So plt.xlim, we'll say x at 1000 maybe, and x at 1500. Just to zoom in to show you exactly what it's doing. It's kind of hard to see when it's farther out. Okay, as you can see, it's hard. Let me try to do the graph up top the same. All right. So you can see we have green values and red values for whatever way the MACD is trending. Now, as you can see, right here, we are starting to trend downwards. And that is reflected in the MACD as well. So the MACD is red, meaning that the stock is going down. And as well as the signal. The signal is also trending downward, so indicating that maybe we shouldn't be buying then. See, this is trending up here. The trend line is going up as well. And then starting to flatten off and even go down a little bit. And that's where you see the trend line go down again. So it is a fairly good indicator. It's not the only indicator that we can use, obviously. So let us continue on. Yeah, okay. So that does MACD and the simple moving averages. Let us continue on with some other indicators that we can use. And the next one we'll do is RSI. So RSI is Relative Strength Index, and that is going to be is going to tell us whether a stock is overbought or oversold, so that we can see kind of where the stock is trending and whether we should buy it or sell it. So let's go ahead and do that. Again, I'm going to define another function, so I'm going to run up to the top here. I'm going to define calc RSI. RSI is going to take data and is going to take a length. Actually, I'm just going to call this a period. Okay, how to calculate the RSI? Well, first thing we need is we need to know what the difference was between the price today and the price yesterday. So again, Pandas comes with super useful built-in functions. So we can actually just call that, if I say delta is equal to the data.diff, and we're not going to pass anything in, default is 1 day, so, or 1 shift. So it's just going to take the data before it. It's going to take the current data point, subtract it from the one before it. It's going to give us the differences across it. Okay, so RSI is going to say, I want to know every time the difference is above 0 and every time the difference is below 0 in 2 separate things. So there's going to be an uptrend and a downtrend. So the uptrend is going to be that delta, but we want to clip all of the lower points off. So we just want to say, make all the lower points 0, and then make all the positive points whatever the actual point is. So we're going to do a delta.clip, and we're going to say lower is equal to 0. Okay, that takes care of the upper. Now we also want to do the same thing for the lower. Except it's going to be reversed, obviously. Okay, so we're going to say down is equal to clip, but we're going to say the upper is equal to 0. So it's going to keep all of the negative values, but it's going to clip every positive value to 0. Now, we don't want our ratio to be negative, so we're actually just going to multiply it by -1. Okay, so now we have two trends that are clipped at 0, and in this case, now they're both positive because we multiplied the down by -1. And so what we're going to do is, now that we have both of those, we're going to do an exponential moving average on the up and the down trends. So we're going to say EMA up. This is going to be equal to up.ewm, what we just did before. We're going to say com is equal to the length. So in this case, I called it period. We're going to say adjust is equal to false again. And we're going to do a dot mean. Okay, so that takes care of the up. We're going to do the same exact thing for the down. Let's go ahead and copy that. Grab our down value, and we're going to say down.ewm. Okay, so now we have our exponential moving averages for the up and down cycle. We need to come up with our relative strength. So RS, all that is the EMA up divided by the EMA down. So relative strength, now we're going to come up with RSI. And RSI is taking that relative strength number, and we're going to say RSI is equal to 100 minus 100 over 1 plus RS. All right, that's all RSI is, and then we can just go ahead and return RSI. Okay, coming back down here, let us go and create another column. We're going to call this RSI. We're going to say calc RSI. And we are going to pass it previous close as always. So I'm actually just going to copy these two up here. I'm actually going to change my period to be 13 though. So pass in previous close and pass in 13. Now I'm going to do one more thing. So I'm going to create one more column by copying this, moving it down. But I want to do the RSI not on the close. I want to actually do it on the volume. So I'm going to make an RSI volume column. And I'm going to pass in previous volume, doing the same exact thing that we just did before. So this is just an indicator on how much has the volume moved over time. Again, let me go ahead and graph this for you to see exactly what it's doing. So grab figure. We're going to do a plt.plot. Okay, so we're going to be plotting the X versus the history at RSI. And we're going to just say color is equal to purple. Okay, so this is going to give us our line. There's two more things that we need in order to really assess the RSI. And that are some limits. One is going to be at y equals 80, and the other is going to be at y equals 20, and I'll get into what both of those mean in a second. But in order to plot those, we're going to do a plt.plot. We're going to pass it in two values for x. So x at 0, and then the other one we're going to pass it in is x at -1. Okay, so we have the very first x value, very last x value, and all we need to do is create the y values, which will be, in this case, 80, 80. Okay, so this is going to be a straight line at 80. And we are going to make this color equal to red. Go ahead and copy this because we're going to do the same exact thing. But we're going to change this to 20. And in this case, we're going to change the color to green. Go ahead and run that, and we will see exactly what it's doing here. May take a second to load. I did not do a plt.show. Sorry about that. There's one other thing that we may want to do, and that is copy that xlim. So before I show it, let me go ahead and do that. And while I'm down here, I will know the values of this. So this is always going to be between 0 and 100. So let me just go ahead and change the ylim to reflect that, and we'll move forward. Now, if you wanted this first plot to take up the full screen, what you could do is you could adjust, instead of plotting the entire graph, you could just plot whatever points that you're trying to do. I'm not actually going to worry about that right now because it's not that big of a deal. Okay, so what is this telling us? So the relative strength is telling you whether or not the stock is overbought or oversold or approaching there or whatever the case may be. So this red line means whenever this purple line is approaching it or above it, it means the stock is approaching oversold territory. It does not mean that it is oversold and it's going to go, the red line is overbought. So it does not mean it's actually overbought. It just means typically when it approaches that value, it starts to trend in the other direction. Okay, so for instance, I don't really have a good example here, but this RSI was trending up towards the overbought line, and then all of a sudden it had this massive correction, and you can see that correction sold it, right? So it starts to sell, and it starts approaching this oversold line, and that means, hey, this is super cheap essentially, and people are going to start buying it. And so once it hits there, you can see it starts trending upward, and the price actually does go up for a little while anyways, and it kind of levels off. I don't have super big peaks here to see it, but that's essentially what it means. Now it looks like this was approaching up, and maybe it was starting to sell off right after this point. So maybe in the future we can adjust those X values to see something else. But that's what it does. It's essentially mapping how much it's been bought, how much it's been sold, and gives you an idea of when it may be trending the other direction because it's starting to be overbought or oversold. You'll see some stocks, like a lot of tech stocks, like Tesla, it will just be living in that red section for long periods of time and never come down. But some of the stocks follow it fairly well. So it is a fairly good indicator. And I'm not going to graph it, but the volume is just going to be the same exact thing as the price, but it's going to be when the volumes are approaching critical. Okay, so that is the RSI. One other thing that we can calculate really quick, there's something called Bollinger Bands. So if you scroll up to the top again, we're going to make one more function. Def calc Bollinger. And Bollinger is going to take same as before. So data and some period. Okay, so what the Bollinger Bands are is they're going to put two, a lower and an upper band around whatever the price is. And what those reflect are two standard deviations away from the mean. And those kind of give you an idea of how high or how low the stock is going to move short term. If it hits one of those, it may bounce off of that, is essentially what it's saying, because it doesn't tend to get farther than two standard deviations away. So they are very useful indicators, and let me go ahead and show you how to calculate those. So first thing, like I said, it's the mean and then the standard deviation. So the mean is going to be equal to data.rolling. Again, this is a simple moving average. So we're going to take whatever our period is that we passed in, and then we're going to do a dot mean. Standard deviation, we're going to do the same exact thing, except we're going to call this standard deviation, and we're not going to take the mean, but we're going to take the standard deviation. Okay, so now we can calculate our upper band by saying the upper band equals np.array mean plus 2 times the standard deviation. We'll do np.array standard deviation. Okay, so again, the upper band is 2 standard deviations away from the mean. The lower band is -2 standard deviations away. So it's still 2 standard deviations away, but in the other direction. So go ahead, copy this. We're going to call this one the lower band. And this is going to be -2 times the standard deviation. And we can just go ahead and return both upper band and lower band. Scrolling down. Went too far. Here we go. Go ahead and actually you need to pass both those in. So just call upper and lower equal to calc Bollinger. There's 2 L's in it. We're going to be passing it history at prev close. And for this one, let's go ahead and use 20. You can play around with all these numbers. All these numbers I'm throwing out are just ones that I've used before, like the MACD. 12 and 26 are like the more common ones. They don't have to be 12 and 26. You can mess around with them, figure out which ones work best for you. Same thing with simple moving averages or any of these that I'm using. They're just whatever periods you want to look back on the data. Okay, so these are going to give us our upper and lower Bollinger Bands, and so we just need to go ahead and store those. So I'm going to call this upper band going to be equal to upper. And then same thing, but lower band going to be equal to lower. Okay. I'm actually just going to plot these right on our first graph. So I'm going to make two more, but I'm going to do the upper band and the lower band. I'm actually, what color should I do? Let's just go ahead and do orange and plot it. Hard to see. Let me comment out the limit. Let me interrupt the kernel for a second. Okay. As you can see, that error is I just interrupted the kernel. But as you can see, it's sort of hard to see, but there are two upper and lower limits, and whenever the stock starts to approach one of the limits, it does bounce off of it, or it tends to bounce off of it anyways. Again, not always an indicator that it's going to do it, but an indicator that it may do it. And same thing with the top. Once it starts hitting the top Bollinger Band, it tends to go back down after that. So another indicator to tell you if it's working or not. I interrupted the kernel, so I just need to go ahead and run these cells really quick again. And we can go ahead and move on. So those are all the indicators that I'm going to do. But one thing that we haven't touched on is that gives me the indicator right now, but maybe I want to know trends over the last 2 days, 5 days, 10 days. I want to know how much has each of these changed over the last however many days that I want to do it. So we can calculate those. And to do that, let me go ahead and move this display history towards the top. And I'm actually, just to make it go faster, I'm going to cut out all of this graphing just so that I can see the data frame that we made. Okay, so here's all of our values. And what we're going to do is, I want to know the changes. So we are going to take basically all of these. Just see if I can copy them. Okay, so grab everything up until previous close. And those are going to be our column names. So I'm going to call those labels. And we're going to go ahead, paste that in, and you just need to add quotes around each of these and separate them with a comma. Now, the one that we do not want is weekday, because we're not going to get anything from the change in weekday because it's just a value for the week. So go ahead and fill all those in. It's going to take you a second. You just work from the back. All right, almost done. And what we're going to do is we are going to calculate the percent change for each of these different columns that we're going to be using. So the very first one that I'm going to calculate is, let's just calculate the day before. How much did it change from yesterday to today? So my period is going to be equal to 1. It's just looking 1 day behind. And now what I'm going to do is I need to make new labels for each of these because I'm doing a 1 day look back on each one of these, or 1 day percent change. I need to make new labels, so I'm just going to call that new labels. And we're just going to go through each one of these labels, and we are going to say string of whatever period that we're using. So in this case, it will be 1 plus, I'm going to do D. So it's going to be 1D, and then it's going to be an underscore, and then it's going to be whatever the original label was. So, and the very first one will be 1D underscore previous close for 1 day previous close, or percent change of 1 day. Okay, so to do that, we're going to say plus label for label in labels. So what this is going to do is it's going to go through each one of these labels, and it's going to put a 1D in front of all of it. Print new labels to show you that. I'm going to move this data frame print to the very bottom again. Okay, as you can see, 1D underscore whatever the original title was. Okay, so now we got our titles. Let's go ahead and actually calculate the percent change. Again, Pandas has this built in, so it's very easy. So all we have to do is say history at new labels is going to be equal to the history at whatever columns that we had. So I called those labels. So I need the data frame at each one of those columns. I'm going to do a dot percent change, PCT change. We're going to pass it our period, and we need to pass it a fill method equal to ffill. Okay, so this automatically calculates percent change for each one of our points and then adds it to our data frame. So let me get rid of this, run the cell. I do have something wrong here. Percent change is percent underscore change. Okay, there you go. Scrolling over. Okay, you can see that I now have a new column with these percent change. So how much did it change? In this case, negative 0.6%. Okay, so I mean, we didn't have much change here, but some of these other values will be bigger. Like for instance, over here we have a 1.7 change over there. Okay. That is for one period. We can go ahead and calculate these for however many we want to do. So I'm just going to throw a few more in here. I'm going to say when the period is equal to 2, when it's equal to 5, and when it's equal to 10. So this just gives us a range over the last 10 days, some different percent changes that we can add to it. Go ahead and run that. And it's just going to add that in here. So you can see now we have 10 days. 5 and 2 and 1 will all be in here. It's just truncated a little bit. But you can see all these percent changes. Some of them are fairly large, some of them are smaller. But we can go ahead and finish it off with that. That's going to be all the data that we're going to calculate. The one thing that we still need to do, though, is we have a lot of not in numbers, and we do have some infinities in here. And we do need to correct those. So there really is no point in keeping an entire row where all of these are not in numbers, because there's just no data and it doesn't make any sense to keep it and try to predict on it. So what we can actually do is say history is going to be equal to history excuse me, dot replace. We are going to be replacing np.infinity. So I just need to replace infinity with not in numbers, and then we're going to do a drop NA. And that's just going to drop every row that has not a number in it. And this should be the first, since we did a 200 moving average, the first 200 lines should all be dropped from this, because they're going to have a not a number. Because that is the longest one that we looked back in the future on. And I'm just going to go ahead and once again plot everything. And see what we can come up with. me do one thing here. Let me go ahead and plot that XLim just so we can zoom in a little. Okay, so we got our Bollinger Bands, we got our simple moving averages, we've got our MACD along with its signal, we've got our RSI along with the volume RSI, and then we have a whole bunch of other data that we can now use going forward and predict what the price will be at a given point in time. So for this video, I'm going to stop here. Next video, we are going to be using linear regression to try to predict whether the stock or what the price of the stock is going to be after a day, that whatever day we give it. And we're going to try to see if we can make some profit over a year on a whole bunch of different tickers. So stay tuned for that in the next video. And for now, if you got anything out of this, please like the video, subscribe to the channel for more stuff like this, and I will see you in the next one.